Managed to hold fuel prices steady at a time when the world is battling a fresh energy shock. Across major economies, petrol and diesel prices have surged sharply in the aftermath of global tensions and supply disruptions. But in India, pump prices have remained largely stable. Now, the big question tonight is, how has India managed this balancing act, and how much longer can it continue? Part of the answer lies in the closure of a two-decade-old financial burden. The government has finally cleared the oil bond debt issued during the UPA years, bonds that were floated to shield consumers from rising crude prices between 2005 and 2010. What began as a subsidy mechanism eventually turned into a repayment burden of over 3 lakh crore rupees with interest, a liability that weighed heavily on the economy for years. At the same time, India moved to secure domestic fuel availability by tightening supply-side controls. Refineries were directed to sharply ramp up LPG production, increasing output significantly to ensure that households and domestic markets were protected from supply disruptions. But the biggest shield for consumers has been the public sector oil companies themselves. Instead of passing on the fuel burden of rising global crude prices, state-run fuel retailers have absorbed a significant chunk of the increase, taking heavy losses on every litre of petrol and diesel sold. Alongside this, the centre has cut excise duties, reducing tax and burdens and giving consumers additional relief at the pump. The contrast with the rest of the world is stark. In the United States, fuel prices have jumped dramatically, crossing record levels in several states. The United Kingdom, Australia, Japan, Canada and several Asian markets have all seen steep spikes, with consumers paying for far more than they did just weeks ago. In India, fuel prices in major cities from Delhi and Mumbai to Chennai to Kolkata and Hyderabad have remained comparatively stable. But this stability comes at a cost. Oil marketing companies are under pressure, margins are shrinking, and the global crude market remains deeply volatile. So the question now is no longer whether India has managed to keep prices stable. The question is whether the stability can last. With global pressures mounting and state-run oil firms absorbing losses, is a fuel price hike now becoming inevitable is the question. Tonight we track how India has fought to shield consumers from the global fuel storm and whether that shield is beginning to crack. Let's talk about this with our guest. Joining us on the show is Dr. Jayajit Bhattacharya, President of the CDPR. Mr. Sumit Peer, political commentator, also joins us on the show. Last but not the least, Dr. Rajneesh Kumar, economist, with us on the broadcast as well. Dr. Bhattacharya, I'll begin with you. So the big question is, how has India managed to do something which is so difficult to do? Countries like the United States, which are one of the largest producers of oil, have seen spikes. India, in comparison to the United States or some of these other countries like Brazil or Argentina or Venezuela, don't have reserves like China and don't have the capability to produce crude oil at that space and at that quantum. How has India been able to wave this magical wand, sir?
So let me give a little bit more background. Since this decade started, 2019, 2020 onwards, we in India and the rest of the world has been facing a series of crises, from COVID to the Ukraine war to the bombings in Gaza to what we are seeing in Iran. So it's been one challenge after the other and one crisis after the other. And therefore, what we are witnessing now is really should have been the last straw on the camel's back. But what the government has done in India, which is quite different from others, is that one, obviously, it has absorbed some of the price. It has, ensured that the oil market companies, which are public sector companies and therefore hitting the exchequer, have absorbed some of the price difference between what the global prices are and what the domestic price is. But also, more importantly, the government has reduced the taxes on petrol and diesel, because it's critical that petrol and diesel and fuel prices are kept low, because any increase in these prices are significantly inflationary, as our food products and everything else really moves on diesel in the trucks. Also, what the government has done is very intense supply chain management, including ensuring that some of the chemicals which can be cracked and turned into fuel is diverted and actually has been cracked and turned into various kinds of fuel, including LPG. For example, propylene has been completely diverted into making of LPG, and therefore we have been optimizing whatever chemicals and petrochemicals that we have in order to ensure that there is that much more of fuel being supplied. Along with it, there has been a long-term plan of adopting ethanol, which comes from agriculture, which is basically a byproduct of things like sugarcane, and a increased mixing, and we have reached a level of 19% of ethanol being mixed in fuel, which means we have buffered ourselves by 19%, and that is being jacked up to 25% as we move forward. So therefore, that has been there has been a 20% relief. Another more important point is the fact that we have got the fuel from other sources. So it is not just the price, it's just the sheer availability. For example, in other places, the prices may have moved up, but the fuel itself is not available. It's, if you look at Pakistan, Bangladesh, Sri Lanka, the fuel itself is not available. We have made sure that the fuel is available. We have opened up other markets, the Nigerian, the West African markets, the markets from South America, from Russia, where we have been ensuring that there's a continuous flow of fuel happening. And obviously, those fuels are not coming at any lower price. They are higher price. We've already exhausted some of the long-term contracts we had, which were locked in at a lower price. So as we open up new market sources or new sources of oil, those are coming at the current global prices, which are significantly higher. Our total basket of oil cost right now is about $108, which doesn't really allow us to sell petrol at the current 95 rupees per liter that we are doing. But all the other previous steps has allowed us to keep the price at the current 95 rupees. I also need to underline that why India has been able to do this and why others have not been able to do is because there is a geopolitical heft and space that India has created in the last 10 years, which has allowed India to reach out to all these sources of energy and get the energy from these sources. That is not something that the other countries have the luxury of doing. So that's a geopolitics that has helped us in being able to tap into these sources of energy. Having said that, we did a great job in terms of fiscal deficit last year. We were able to bring down the fiscal deficit to 4.4%. If people recollect, after COVID, our fiscal deficit had reached 6% plus. We were really doing badly because we made sure that the vulnerable sections of the population get what they need to get to survive the COVID pandemic. And then we were able to bring back the fiscal deficit down to 4.4%. But with the current situation, because energy is one of the largest imports that India has, clearly we will take a hit as we move forward. But that hit should not be passed on to the next generation through bonds and so on and so forth, which was done in the past, which was extremely harmful and hurtful for the economy. So eventually, some of that burden has to be passed back to those who are using the fuel now. And so hence there will be some price rise. Otherwise, we'll be adopting some economic practices which have been proven to be harmful for the economy in the long run.
Sumit Peet, what is your assessment of how the Indian government has been extremely buoyant, for the lack of a better word, when it comes to this volatile situation? And secondly, it's been extremely generous to the Indian consumer as well. And despite the fact that, when it comes to realities of crude oil, India imports most of its crude oil, and still we've been able to keep the stability in prices at a maximum, as well as panic has not set in.
Vineet, thank you very much for having me on your show. The first thing, what you rightly said, the panic has not set in, and I compliment you for that, because that is what a lot of people wanted to do. That is what a lot of tamasha was happening about. You've seen those slender protests happening. You've seen those comedians coming on the roads, which are disguised as political workers, and they were trying to create a big tamasha around it. Nothing like that has happened. Look, if you look at the Modi government, when Modi ji came into power, he had around 5 or 6 suppliers. Saudi was number one supplier. So today we have around 42 suppliers. We don't have no longer 6 or 7 suppliers. Number one is Russia, which has taken the maximum brunt and which has saved us billions and billions of dollars of money, which is being basically utilized now. So Modi took all the political fire. He took all the political beating. All kinds of allegations were thrown at him. But that money which was saved then by importing the Russian oil has helped the Indian consumer. Now it has been a substantial budget and buffer, and you also free the oil companies from the Manmohan Singh's burden. I will call it Manmohan Singh's Congress burden. So otherwise, these oil countries would have been bankrupt by now. It's not a question of कि तेल कितने का मिलेगा. They will not able to sell you तेल. They will have gone out of business. So the Modi ji didn't even save the oil companies. He also, at the right point of time, he could see what is happening. So the Russian oil was imported. That's point number one. Point number two, the second supplier is Iraq. The number third is UAE. Number third is Saudi. Number fourth is UAE. And number fifth is America. When we reduce the Russian oil, we increase the American oil so that the things are kept cool. And then after that, minus 37 are 1 to 1.5%, and they are spread across the length and breadth of the whole world, so that your geographical attendance, your political attendance, your physical attendances, there is no one big supplier which can twist your arms. Today, the Middle East got hit, but you had the alternate network of suppliers which was doing fine, because after Russia, I think, Saudi Arabia was around 13%, UAE was around 9%, and 5.5% was America. So you have not have any supplier in which you have kept all your bag, in one basket. After that, then you had your refineries which were quite in place. You are refining the Russian oil. You made some money from out of that. Use that money to buffer it. And when it comes to the attendance and managing the supply chains, you had already got all your homework done. What you have to make sure that the things keep on flowing. Strait of Hormuz is closed. Tankers are not coming. Still, your supplies are coming. There is no LPG shortage in the country. Maybe want something here and there. Your prices are more over in control because you had a vision. You could see that something like this could happen, and you did not start buying the umbrella when the rain started coming. You had the raincoat and the umbrella well long back in plan, and you know what it is going to happen one day. So the prudence of the government is to act and have the policies and procedures in place, knowing a situation like this could happen. Now, and if you look, for example, look at my fellow country, the great country called Pakistan. I'm being sarcastic here. They are selling petrol for 400 rupees a liter. We are at 96, and the biggest debate on Pakistani TV is Bharat mein 96 rupees, hamare 400 rupees. Out of that, 153 rupees go to the IMF, by the way. And the biggest business of Pakistanis is smuggling petrol from Iran. They go to Iran, get the petrol, and sell it back in Pakistan. That is the biggest business. Now, when these kind of fiascos are happening, where the prices are almost 4 times our price, and after that there is no availability, and in a country wherein after the Ujjwala, your LPG, consumption has increased 3%, you are importing around 85% of your petrol. But with it, you did the ethanol blending, you had the green hydrogen policy, you have the solar panels, you have pretty much everything in place, and you were optimizing. Look at Modi's vision. 5 years back, government was not buying any diesel cars. Around 3 years back, 4 years back, government started only buying these electric vehicles, right? So there was a vision which was getting translated everywhere pretty much down the line. We're producing the highest amount of solar power today. We're producing highest amount of hydrogen, hydroelectric power today. Now, with a lot of these things happening, your dependence on gas turbines, your dependence on diesel power turbines overall was reduced. You are not getting those diesel for those guzzlers called railway engines. There are hardly any railway engines which work on diesel now. Earlier, there used to be a time in the Congress era, there were 2 companies making railway engines, and one was going for India and one was going for some African country. There was no other country which was buying them because we had obviously some arrangement with them. And Congress era, we used to buy Tatra trucks from a caterer in UK. He was a caterer, but we were buying Tatra trucks from him. We have seen all those fiascos, Vineet. We have seen all this mismanagement. And when the intention of karma determines the outcome of karma, that is what Bhagavan Shri Krishna said in Bhagavad Gita, and that is what you are seeing today. Today, yes, we are going through a tough patch. Yes, our public sector undertakings are taking a lot of pressure. Yes, government is absorbing a lot of things. We have cut the excise to make sure that there are no inflationary pressures on food and fertilizers, and the common man can be insulated to the maximum extent possible. But if the things continue, I think an price hike in the petroleum products is imminent, because that is what is happening across the globe. And what you rightly said, Vineet, USA produces so much of oil, still they were doing $5.5 to a gallon a few days back. And if you look at that situation, my petrol prices, with or without the fight of Hormuz, without Ukraine war, they've been more or less stable. My inflation has been under control. The things have been under control. No LPG shortages. Politically, there was a shortage. Our friends in Congress would love to have that situation, but they were deprived that occasion and that privilege what they wanted the hard. All the rallies they did did not again yield them any results. Now, managing a country like India, managing the politics of it, managing the pricing, managing the expectations, and managing the tamasha, along with the geopolitical attendance, and keeping prices control, and making sure that the companies were already pulled out of this muck which Congress created. And now the Russian money which we saved, a lot of people were having problems. We ruffled a lot of feathers with Trump. But today that money which was saved has been used to save the country and save people like you and me and the middle class of the country from the price hikes and price crisis. And the compliments to government, with everything happening, there was no shortage. I have seen some of your competitive channels. I don't know, they must be running pretty low on TRP. They were showing one picture, they were showing one, petrol pump where people were queuing for, petrol. And I went to, Vineet, I went to Jaipur, I drove to Haridwar in the meanwhile, and I did not see even one pump in 200, 300 kilometers of drive, 600 kilometers coming and going, where there was a queue. So all those kind of fiascos and all those imagination were created. Media was being manipulated, but thank God we have stopped this. We have survived the storm, and we are going to survive it again. But at the same time, if the things continue for long, and some rupees of petroleum price hike is imminent, that you and me and everybody watching this show has to be prepared of. That is going to happen somewhere down the line, because it is best what more government can do. Benchmark 95 rupees to 400 rupees in Pakistan, and that too it is not available. That too you have to be lucky. Maybe you have to murder a few people to get your car filled. That is what you might have to carry a AK-47 next time to a petrol pump and get your car filled. That's what is going to happen in Pakistan next. So looking at that scenario, the India is doing pretty good, pretty stable, because again the vision and the intention of the government is clean. And that is what you and me are seeing, and what is being delivered at the ground. And what you rightly said, even the world is surprised how India is able to manage it with such a big population and not having those $1.4 billion of, reserves like China. Still, we are doing great, managing things, getting things done. Compliments to the government, Vineet.
All right, compliments to the government of India. Dr. Rajneesh Kumar, compliments to the government of India. Let's make that a pivot and a plank for the next round of discussion as well. It's always good to praise the government where it has been sympathetic and empathetic. But the big question that I asked at the beginning of my monologue was, how long can the government of India also sustain this without passing on, this hike and the situation onto the consumer on the ground?
Yeah, thank you for inviting me. First, I would like to clarify that India avoided fuel panic, because India prepared for supply shock before actually the crisis actually arrived. Let us understand this on the scale of crisis first. Global crude oil jumped from nearly $70 per barrel to almost $126 per barrel, an 80% increase within a short period of time. Historically, such jump creates immediate fuel shortage, panic buying, economic slowdown in importing countries. We are third largest that oil importing countries globally. So we saw exactly the globally what is happening, like that we are seeing that in Pakistan that petrol prices and diesel prices are 400 per liter. Europe crossed nearly 200 per liter in several countries. Yet India maintained petrol around 95 per liter. This did not happen automatically. India effectively created a three-layer economic shock absorber. First, massive subsidy absorption. At peak stress, the government and PSU oil companies absorbed nearly 24 per liter and rupees 30 per liter on diesel, instead of immediately transferring the burden to consumer. And secondly, I see that there has been cut in excise duty by rupees 10, and now the excise duty on petrol prices is rupees 3 per liter, while the diesel is almost without excise. Third, the supply management. India immediately increased LPG production from 36,000 ton per day to nearly 54,000 per day, almost 50% increase within a week. This prevented a panic shortage. So macroeconomic perspective, India prevented a classic demand shock, because when household spends more on fuel, they spend less on everything else like healthcare, education, consumer goods, and discretionary spending. Since consumption contributes almost 55 to 60% of India's GDP, protecting household spending was critical. So India has managed this by way of three-layer of shock absorption. So now your question was that how long we can do this? Hello?
Yeah, all right. Well, I
Yeah.
see your point,
Yes.
but unfortunately we've run out of time as well. I want to thank all our guests for sharing their perspective. They were all important.